Right, welcome to today's stream. It's 11th of March, and I think the markets are pretty flat if you ask me. I think just a couple of minutes before I came online, I saw that Trump was telling another reporter that the war is going to end soon. So I guess that is going to be his MO, at least in the next couple of days. Every time the oil prices spike, he's going to come out and tell us that the war is going to end soon. However, we are seeing escalation of the war in Iran. I believe they are planting mines in the Strait of Hormuz. They attacked a couple of boats and a couple of ships and tankers and things like that. So I don't think it's going to end as soon as Trump claims it's going to end. I think he's just saying that in order to calm down the markets. Hi, Bob. Good morning. It's an interesting day in the markets today. Give me a minute. All right. So today, the the main the main portion of today's stream is to talk a little bit about the public portfolio. I've taken a look at some of the companies, and I think there are a lot of spaces or a lot of companies that we are looking at. Two of the companies are actually within the same industry, and it's basically something I want to do right now where I'm actually talking through some of my thought processes, because there are actually instances when I was looking at it that if you're talking about the fundamentals of the company, one company is actually slightly better than the other. But for the size of our portfolio, it might actually be hard to, yeah, to actually include all of those companies inside with if we want to sell options on the position. So we will have to decide and balance it out. But I just want to talk through the composition of the portfolio in a bit. So what you're seeing on screen right now is actually the buy order and sell order for the last couple of days. So one of the things I have actually done is to close out one of my BMNR options. So I had call options on 2,500 shares of Bitmine expiring this Thursday. So on Friday, sorry, not this Thursday, this Friday, 13th of March. So because Bitmine's price action has been pretty strong lately, and Ethereum has been able to maintain above the $2,000 level, decided to close out that position for 9 cents yesterday. So you can see, actually filled at an average price of 7 cents. Sorry. So I filled at an average price of 7 cents. So that's fantastic. Made 2 cents more than I thought I would, because I actually sold them for 9 cents, but they got filled at 7. Um, and if you just go all the way down, you can see over here, these same 25 calls were actually sold on the 19th of February at 50 cents. And then we actually bought them back for 7 cents. So we made 43 cents per share on that trade over 2,500 shares. So the $23 call for BMNR. Yeah, I mean, of course, I think going out into next week, we are not sure whether or not things will start to calm down. So I think it's okay to like sell relatively shorter duration covered calls, even though the strike price might be relatively near. You can always roll that out. Okay, so I'm going to jump into the spreadsheet after I take a look at some of the news. So this morning, we actually also got CPI, and CPI came in basically more or less at expectations. Let me just share my screen. All right, so this morning when we got CPI actually came in at expectations at 2.4%. Right now, the reports are saying that goods prices don't show much tariff damage yet, and I think if headlines like this persist, right, and if the tariffs do not get any worse, I think right now Donald Trump's attention is fully on the war, because he was making all sorts of tariff threats previously. Then I think it's actually good for the economy. I mean, we don't want to hear about we don't really want to hear him keep talking about tariffs. So it's not that the war is a good thing, but since his attention is focused on the war, he's not talking much about tariffs right now, and I think markets are appreciating that. So um, I think CPI to me was more or less in line with expectations. So I'm not personally too worried about it. The thing that we want to talk about is over here. Trump seesawing, telling another reporter the Iran war will end soon. So, like I said, I think he knows that the war in Iran driving up oil prices is causing some uncertainty in the market. And at every opportunity he has, he's trying to calm down the market. I don't actually think the war will end as soon as he says it will end, because if they are aiming for a regime change, then it seems quite unlikely that airstrikes are going to do it. All right. All right. Welcome, everybody. Good morning. Okay, so we know right now where we stand. Inflation has come in more or less in line with expectations, and at the same time, Trump is, taking every PR opportunity he has to tell investors that, yeah, the war is going to end soon, right? Whether or not we believe him, that is, that is a totally different story altogether. But treasury yields are climbing after the inflation report. Oil prices are climbing, and that's why you can see a little bit of uncertainty in the markets. I think the reaction really isn't as bad as I expected, because if I take a look at the S&P 500, it's still basically trading between the 50-day and 200-day moving averages. It's basically range bound, and it's still the same thing, right? It's having problem breaking over the 50-day moving average, and I don't think we have any catalyst in the recent days that basically justifies the S&P 500 breaking over the 50-day moving average. All right, give me a minute. Okay, so first thing I want to do is to update the portfolio, the bigger portfolio. So some of you were asking me about um my price average of Bitmine. So you can see over here, this is the transactions that we have had on Bitmine. I haven't added in, yes, the transactions from the last couple of days. So if you zoom in over here, we also have a transaction on the 4th of March. Okay, so if you're not sure what transactions I am talking about, basically we sold a covered call over here expiring 13th of March for a strike price of 24, and then we sold another covered call expiring 2nd of April, strike price this time $30, and I believe this was done at 41 cents. So I had 31 contracts over here, 25 contracts. So 5,600 shares of Bitmine altogether. And basically, let's see, price per contract over here, this was 50 cents, right? That was the one that we saw. And then after that, I believe this is 40 cents. Let me just double check. Where's my Weibo account? Oh, it's over here. So if I take a look at the Weibo account, okay, let me see, where is it? Weibo, oh, it's over here. Okay, so in the Weibo account, what we have right now, this is the P&L. What's up with my Weibo account? It's not behaving. Give me a minute. I have no idea why my Weibo is hanging right now. If I can't put this in, I will. All right, you know what? I will deal with this later. But basically, I think it's 40 or 41 cents. I will double check again. So all these positions are open right now. The price of this, okay, we basically closed it at 7 cents, so this is no longer relevant. And the price of this, I believe it's around 20 cents. So we'll just leave it at that for now. I'm not too sure what's wrong with my Weibo. Later, I'll try and get it done. But basically, all you need to see over here is that we are going to close all of these positions. So basically, from the open positions, I haven't really updated this much since December of last year. You can see we have a total of $9,700 in realized premiums since August of last year, and unrealized premiums of $1,170. So if we go ahead and close all of these, except for the last two, and I'll take you through the numbers later on. All right, sorry, and except for the last one, we closed this one yesterday as well. You can see that our we have realized all the premiums. The reason why it's not showing anything over here because on this side of the graph we haven't actually keyed in the closing price. So for yesterday's, we closed at 7 cents. This one at the moment we are still assuming that it's going to expire worthless. So the date that it was closed, we closed it yesterday, 10th of March. So it's 19 days. There's no fees involved. The total P&L for that cash secured put is $1,075, which means if you take a look over here, when we sold that cash secured put back in April, we received $1,250. And out of this $1,250, we kept $1,075, which is around a 3.2% yield. Okay, so this actually offsets some of the bigger losses. You can see one very big loss over here that I'm highlighting to you. And the reason for this big loss is because we had a covered call. We had a cash secured put, I believe, at around $40. But I closed it at a loss during the time when Bitmine fell all the way down to $30. So that's why there's a huge loss over here that we are making up since then. Okay, so moving on from that, we are assuming that this will expire worthless again, also on the 2nd of April, and that's 29 days. If it does expire worthless, we should see a yield of around 2%. So if you average this out, you get a yield of somewhere between 2.5%, right? Because in one half of the shares, you're getting around 3% yield. Second half of the shares, you're getting a 2% yield. So that is how I look at this, and I'm trying to always achieve a 1.5% yield on my shares. Let me zoom this back out for you. So if you look at the chart over here, basically total realized premiums, including the ones that we closed yesterday, is around $11,985, and unrealized premiums, which is the only covered call that we have right now, expiring on the 2nd of April. This is $1,240. Now, I'm not too sure whether or not I am going to sell another covered call. I'll be waiting for a little bit more information towards the end of the week. But I think right now, 2nd of April, this one is perfectly fine. I'm going to leave it open for now. I don't think there's going to be anything. Once this closes, lowers the cost basis a bit more. So you can see my adjusted cost basis for Bitmine is around $37.56, down around half of the position, right? So basically same as everybody. I think it's more or less in the same boat. So I really have no problems over here. This is the Bitmine position that I wanted to update you guys on in the main portfolio. So Bitmine is currently trading at around, what is it, $21 today, right? So we are down around $16. So this is the main portfolio, the one that I am drawing. The reason why this can be quite aggressive, you can see the monthly yield over here. There are some months where there are certain trades, especially during the time when Bitmine fell, where I took quite a big loss, or in this case, when Bitmine actually ran. So the covered calls over here, I took quite a big loss because Bitmine actually ran, and I wrote the covered call later on. So you can see there are two big losses over here. This was because that was during the time where Bitmine was going up. but then we wrote them out later, and we actually got a pretty high yield because we, rolled it out further on. And we closed it quite quickly once it dropped. So this is one of those cases where perhaps, yeah, this is one of those cases where, at that point in time you could actually get $2 to $3 of premiums. That's not the case anymore nowadays. The volatility has more or less, normalized itself, and I think Bitmine is no longer as liquid as it was back in August, September of last year. What is your brain brokerage? I mean, okay, so the thing is, we don't have Robinhood in Singapore. I mean, I keep seeing amid, Tanner, not Tanner, Amit, Chris, everybody in the US, everybody using Robinhood. It looks nice. We don't have it in Singapore. I have Mumu and Weibo, and that's all I use basically. So Weibo is the account where I draw out my monthly expenses from, and then I use Mumu for this current public portfolio. So you can see I track this pretty closely. Sometimes I get a little bit lazy and I have to backdate all of my options move, but you can see there are some very big losses over here. At the same time, there are some fairly big gains over here. I'm highlighting those in purple or pink. And the reason for that, like I said, a lot of these tend to be rolling out the covered calls, rolling out cash secured puts, and then when the price reverses quite quickly, and then that's where I close out the contract pretty fast, realizing some of the profit. So you can see over here, although it's a negative 35%, actually I lost around $1,500, but made that back in the following trade of around $2,100. Right. One of the things about selling calls is you need to get used to rolling. I think that's definitely true. I usually would say that you don't have to roll, you don't have to sell covered calls of on the entirety of the position. So even if it does get called away, you can just let it get called away and then sell a cash account put right at the strike price that it got called away. Of course, the downside in doing that is that you could potentially miss out on the run. Right. So if it continues to running, yes, you make the covered call premium, you make that capital gain from where your price average is to your covered call, but at the end of the day, you still lose that potential upside. So if it would work if this was like Bitmine where it ran all the way up to $60 or so and then dropped all the way back down, not a problem. It wouldn't work for perhaps someone like Palantir or Robinhood during the parabolic moves, and or even SoFi when it was going up between $15 to $30 for a period of time. I think there is a pro and cons to selling covered calls and letting letting your shares actually get called away. It is a risk that you are taking. Of course, the risk is still not so bad. You're just making less money. You're not losing money, but it still hurts. Like, to me, missing out, like selling my Palantir too early at around $70. I think I sold most of my Palantir around $70, and I only sold the last portion, the last maybe 1 to 200 shares at $120. And to me, selling that Palantir at $70 and missing that extra $110 upside or $130 upside hurts more than losing 20-30 grand on a single trade. Yeah, so these are things that people don't talk about when they do the wheel strategy. That's why I hope to bring a little bit more clarity to what happens over here. What was my average? I bought actually more or less the same time as Amit. So in the $10 ranges, and then I averaged up. So I believe my cost average was in the 20s. Let me see. I believe it's in my I believe it's in my. I can show you over here. Because I held it in this Momo account, if I'm not mistaken. And I should still have it in history. How far back can I go? You can look at Palantir. Okay, so sorry, I sold it at $187. Is there any way to see my? I sold, okay, apparently I sold at 187. I thought I sold at 130. I must have sold some at 130, and then my remaining at 187. I couldn't see whether I can find my. Oh, I must go pretty far back. Yep. So I sold at 75, sold at 130. So yeah. Yep. So to me, the reason why this hurt, like I said, because I let a bunch of shares get called away uh in the 20 something $30 ranges. Even before the run started. And then with the run, sold at 75, sold at 130, sold at 187. And I moved that Palantir money into SoFi at that point in time, which hurt even more because SoFi just stayed stuck at $45 for the longest period of time. Yeah, but I believe the average was around $20 if I didn't remember wrongly, after averaging up and all that. All right. So let's move on to talk a little bit about what we're going to do in the portfolio. So this is the main portfolio. Basically, I just wanted to update the BMNR positions. I've decided to take on a couple of positions in this new portfolio. Some of them I will want to invest then investigate. But let me share my screen with you, and then you guys can take a look over here. So if you take a look at this portfolio now, I'm just making do with this front page for now. I will update it, make it look nice and readable. But basically, this entire portfolio started on the 2nd of March, 2026, with just around 100,000 US dollars. Right, for those of you tracking this in Singapore dollars, this is $128 Sing dollars. I do not have 88,000 allocated into stocks right now. I'm just basically counting. I was just basically mathing how much I can actually allocate to different positions. Now, I personally feel like for $100,000 portfolio, anything more than 5 to 7 positions is a little bit too much. However, at the same time, I'm also aware that yes, while it is too much, if I'm trying to like optimize for returns, if I'm actually trying to optimize for returns, this portfolio will end up being a little bit too boring. So we are still going to try and beat the S&P 500, but I'm okay to sacrifice a little bit of returns if we have a little bit more diversifications so that we can follow along with more of the macro themes. So if you take a look at the real strategy that we're running over here on some of these companies, I haven't bought these companies. You can see in the portfolio earlier on, I still have the same 2 companies, 700 shares of SoFi, hoping to round this out to 1,000 shares by today. I actually put in an order at around $18.10 earlier on when it dropped, but apparently it didn't get assigned. I didn't realize that. And from there, we actually built this out further. So if you can see the themes, we have let me just highlight them for you. So we have Amazon over here as a hyperscaler along with Nvidia. That gives the large part of the AI play. Now, one of the two names that I was actually considering for the third position is actually Nebius and Iran. And let me be very clear, I want this like documented, so even for myself, so that I'll remember. Today, on the 11th of March 2026, after I finished my due diligence on both Iran and Nebius, I actually think Nebius is the better play, or the safer play, compared to Iran, sorry, and I would actually consider adding Nebius into the main portfolio. Now, I actually wrote down in my notes over here. Give me a second. I am pretty sure most of these numbers are accurate. So for those of you who are bullish Nebius or bullish Iran, if I misspeak, please let me know, because yeah, I was trying my best to read through the earnings reports and stuff like that. So basically, today Iran is trading around $40. Nebius is trading around 111 today. Was it 111? I believe it was around 111. And I think the reason why I'm a little bit more concerned over Iran compared to Nebius is in the remaining performance obligations. So if you take a look at Iran in 2025, full year revenue came in at just over $500 million. For Nebius, that came in at around $530 million. And right now, they're actually expecting, the revenue breakdown right now, Nebius is having 100% cloud AI revenue, whereas for Iran, they are still, a large part of the revenue still comes from Bitcoin mining. I think only 9 to 10% of their revenue comes from the AI cloud infrastructure. So yeah, I actually do think Nebius is a little bit more high quality compared to Iren. But I'll talk you through it and how I ended up perhaps with Iren in this portfolio. I've always uh, I've always been a little bit skeptical about some of these data center plays. Not not because I don't think the AI build up will continue to last. I'm just not too sure what is their value proposition after that. So what if, right now, yes, there is a shortage of data centers, but eventually Google, Microsoft, Amazon will want to bring some of this compute, more and more of this compute in-house. And so what will happen to these data centers after that? And the thing about the markets and the thing about investing in this kind of cyclical plays is that everybody will want to get up at the top of the cycle. But because everybody is trying to front run each other, you can't actually get out at the top of the cycle. You have to get out slightly before the top of the cycle. And the next person that wants to get out before you will get out slightly before the top of the cycle. And then it goes on and on and on. And you never ever know when is that trigger point where you should actually get out of some of these names. So my concern, like I said, it's not that, the AI is a bubble and all these are fake or there's no need to compute. My concern, like I said, is if these hyperscalers eventually want to bring some of these computes back in-house, what will happen to these other companies then? That's the first thing that I'm thinking of, and that's the first thing why I'm a little bit more concerned about these companies compared to like Amazon and Nvidia. Amazon and Nvidia, especially for Amazon, at the valuation that it is at today, it is a sleep well at night kind of investment. So I'm not too worried over there. Nvidia, I do realize that perhaps in 2027, 28, we might start to see a slowdown in revenue. The thing is, the market is always extremely good at pricing this in. So we might not see a big drawdown in their share price once they do guide for a slower revenue growth. So if you remember, I sold a cash secured put for Nvidia at $170. I thought it might get assigned, although we did sell it for 2nd of April, but because Nvidia was dropping last week along with the markets, there is still 19 days, and in Trump's timeline, 19 days, a lot can happen. So I wouldn't really know whether or not I'll be assigned these shares, but I wouldn't mind buying Nvidia at around $170. Yeah, the Q4 earnings were fantastic. I think for the longest time, I held off buying Nvidia because I always felt like they were always going to trade range bound, and they have been trading range bound for quite a while, which is why last year I bought AMD. But after looking at their fourth quarter earnings, really, I think it changed a lot of perspective around Nvidia and how long more they can continue growing. All right, so these are to me the data center plays as well as the AI plays, and then we also have the ones in green over here, SoFi and Robinhood. To me, these are fintech plays, and that is the area where I feel a lot more comfortable in. Yeah, nothing much here. I think I like Robinhood in the 70s. SoFi, $18 range, perfectly fine, right? And then the orange ones, C Limited and Grab. To me, these are ways that I diversify this portfolio a little bit to get a little bit of exposure to emerging markets. Should there really be a broader slowdown in the US side and people try to run for safety in the Asian markets? Because when you look at how the capital is flowing right now, there are investors. I mean, some of the people that I'm talking to right now, they are actively trying to hedge. They're not going to China, but a lot of money, especially from the Middle East, is actually coming into Singapore as a more stable place. So that is something that people are looking at, and that is one of the ways I'm hedging the portfolio. Now, if you can see over here, when I did my calculations, the reason why C Limited is at 0 shares is that because if I buy 100 shares of C Limited, I would actually be busting my budget unless I'm able to make up some of this capital using covered calls. So that is one of the issues, right? I do not have enough capital, which is why I say ideally, actually, with $100,000, I would personally only own somewhere around 5 companies, not even 7. But for this particular portfolio, because I am also wanting to put out some of the research on these companies, I'm going to go a little bit higher than that 5, perhaps between 7 to 10. So to me, this is interesting, right? Grab and C Limited, I use them every day. It acts as a hedge to the portfolio, and then basically I'll see how I can actually position them. Yes, they actually missed on their earnings, and they actually missed on their earnings, but I don't think this is anything. Uh, there's nothing structural about this. I think C Limited over. Okay, let me just show you my Instagram page because this was something that I was talking about. So for C Limited, they dropped due to their earnings, but really it wasn't a big issue to me because overall growth was still strong. And they were just reinvesting back into the company. Give me a minute. Right. Okay. Let me share my screen with you. All right. So you can see actually when you take a look at their revenue has been growing pretty strong. Let me show you. Yeah. So this is their revenue. The revenue growth has been pretty strong. Then the chart that you're seeing before that is actually their GMV. So if you follow Grab, Shopee basically acts as in the same way as Grab. They actually use GMV to measure the transactions online. Now, basically, for those of you who do not know, Shopee is an arm of C Limited's business. They are basically the Amazon of Southeast Asia. Uh, Over the last couple of years, they have spent a lot of money to build out their logistic network, just in the way that Amazon has done, which is why later on when you see the free cash flow number, okay, so my SoFi shares got, yep, the, the, the buy order went through for SoFi. So for C Limited, you can see over here, revenue growth has been pretty strong. In fact, earnings has been going up along with revenue growth. They are actually coming in at around, I believe, sorry, this is revenue growth. Yeah, their their net income has been pretty consistent over the last 4 quarters as well. So I think right now the worry that people had previously is that C Limited were burning a lot of money. The reason for that is that the competition in Southeast Asia is actually very strong. You have TikTok Shop and Lazada. Lazada is basically Alibaba's arm of e-commerce in Southeast Asia as well. So the competition was very strong. And for the longest period of time, C Limited actually, were using different discounts and vouchers to attract users onto the platform. And that was a very unsustainable way of actually fighting with the competitors because with Lazada being backed by Alibaba and TikTok Shop doing quite well, it was actually very hard for them to compete over here. So give me a minute. Where is my notes on this? Okay. So to me, I'm not too concerned over here because when you take a look at the free cash flow, now this is an annualized graph because they do not always disclose the free cash flow number every single quarter. The reason for that is because they have a financial services segment of the business, and I think that actually distorts the free cash flow. So what they try and do is that at the end of the year, they just give you an idea of where the free cash flow is throughout the whole year, and their free cash flow margin is around 24% this year. So this is actually pretty impressive if you consider where they were in 21, 22 when they were using vouchers to actually entice people to come onto the platform. Now, the reason why they have been able to do so well is because they have added in an AI component or an advertising component to their platform. So although they have managed to raise their take rate on the seller fees, they actually still see the sellers stay on their platform and in fact increase their relationship with Shopee on the platform. So that means the sellers are okay to keep paying more seller fees for Shopee because they have tried out their new AI systems with advertising and things like that, and actually saw that it actually generates um, really more revenue for them. So that is why, to me, they are actually seeing this growth in revenue. Yep. So I personally have no real worries for C Limited. I think that at the end of the day, you just have to understand that C Limited, although they're growing fast, yes, but if you pair them together with Grab, then it becomes a lot more safer and volatile because as we did the valuation for Grab previously, right? I think Grab is a lot more stable compared to C Limited. So this quarter, they actually beat on revenue, missed on EPS. I think, yeah, I think the reason why it is a little bit unfair, at least in my opinion, to to for the markets to have sold off C Limited so aggressively is because if I'm not mistaken, let me go and find the number. I believe their EPS came in at around 63 cents and it was supposed to be 80 cents. Yeah, this is C Limited. Let's take a look. Oh, this is the full year. Let me go quarter by quarter. If you take a look at the quarterly numbers, EPS came in at, yes, 63 cents diluted EPS, whereas the expectations was actually around 80 cents. Now, the reason for this drop in EPS, um, like I said, firstly is to reinvest back into the business, but also because their provision for credit losses increased quite significantly as they increased the amount of loans that they disperse. So if you take a look at the loans that are being dispersed, can I see them over here? Or did I see them in the... No, I didn't see them over here, which means if I go to see investor relations, you're able to see. Their loan book grew by, I think, around 80%. Let me just take a look. So if you are seeing over here, yep, you can take a look at their loans principal outstanding. This basically grew from $5.1 billion all the way to $9.2 billion in just 1 year. So because of that, they had to increase their provision for credit losses. And that's why they saw the knock in EPS. Now, to me, like I said, not a big deal. They are using the money that they make to, in a sense, reinvest back into the business. So I have no problems with that over here. Yeah, so if you ask me, I think C Limited is the faster grower compared to Grab, but I think Grab is a little bit more integrated into everybody's lives. I think I can say that because yeah, I would think that people can envision themselves using Grab every day to order food, to take public transport, and perhaps with Shopee because it is just groceries and buying things online, perhaps not so much. And if you want to talk about the financial services side of the business, I think I actually prefer Shopee's financial services compared to Grab. I've used both. At the end of the day, I found Grab's one, the interface, fantastic. But I've actually moved my money out of Grab uh, in the last couple of months. And the reason for that is because up to now, they still do not have a card that I can link to my Apple Pay, which is ridiculous because they started their financial institutions all the way back in 2023, right? So for me, I'm not a big fan of the partnership that Grab has for their financial services side of the business. They are partnering with one of the telcos in Singapore called Singtel, and Singtel has been notorious for having poor customer service and just a lack of understanding of how to improve the UI and UX of their products. So I think we are seeing a little bit of that in their financial services side of the business. And for Grab, because of that, I think people, at least for me, it does hinder me from using their platform. Although with that being said, they have doubled their loan book in this past year as well, right? But it's a whole different ball game, growing from 500 million to $1 billion compared to what Shopee is doing over here, from $5.1 billion to $9.2 billion. Now, the way that they are able to do that is because they have introduced no, yeah. I think a lot of people don't understand, or don't get the opportunity to see what Grab and Shopee is like in Singapore. Same way as I rely on like people like Amit, Chris, Steve, even Tanner and Tavis to a certain extent to understand some of the things that are happening in North America. I hope to be able to do the same as well. So the reason why they are able to increase their principal loan outstanding so significantly is because they have introduced a new AI underwriting system. Contrary to what Anthony Nodo says, I invest in SoFi. I trust Anthony Nodo that you don't really need AI to do underwriting. But I think with C Limited, they have chosen to go down the AI route of underwriting. Right now, they have managed to increase their loan book without increasing their over 90 days non-performing loans. So that is still around 1.1% below their expectations of, I believe, around 2.5%. So I think for me, I really like C Limited's or Shopee's business. I keep sorry, if I call them Shopee, just know I'm talking about C Limited as a whole. It's just that in Singapore, nobody calls them C Limited. We just call it Shopee. And even the bank, we just call it Shopee Bank, although that's not the official name. But I prefer the offerings inside Shopee's bank. They even have like their own. I believe they use the PIMCO income fund to generate a higher yield for you for your idle money. So there are things that they are already starting to do that Grab is still a little bit behind. You add on to the fact Grab is partnering with Singtel, and I'm not the biggest fan of Singtel. Yeah, I've bad experiences with them all throughout the years, even starting from a young age. When I first started to get my phone line, always had problems with them, adding hidden fees and things like that. Never liked the company. Yeah, so because of that, I am starting to see some of that creep into the culture. Like, I can't imagine any other financial institution launching their checking and savings account and then their credit card not being able to sync onto Apple Pay. I think that's ridiculous, and it's been years. So yeah, and I always repeat myself when I talk about this because it is so irritating for me. I like the interface. At that point in time, when I first started using it, I preferred the UI and UX on Grab. But over time, the functionality and what it can do as a bank and all that, it just loses in comparison to what Shopee does. And with Shopee's bank, the UI and UX perhaps not as user friendly, but it serves more of a purpose as a bank, and it's more and because they can link it to you can actually link your card and things like that. So it has become one of my backup cards or my parents' backup card as well. So that is why I think, personally, for me, if you ask me, between the two companies, it's a bit hard to choose. I think Grab is more integrated into the day-to-day lives of people. But I think Shopee is going to be the faster grower, at least for the foreseeable future. I don't think Grab can grow at 30% across the next couple of years. Although with that being said, ride hailing may actually go up. I'm seeing more and more of the Grab taxis around. Our COE, which is the license, not the license, the certification that you need in order to buy a car in Singapore, that is over $105,000 right now. So which means you need to pay $105,000 to get the cert, and then you go and buy your car, which is another couple $100,000. So I mean, depending on the make and model. So I think with people being priced out of owning a car in Singapore, even Anthony Tan himself said that they're expecting the ride-hailing side of the business to continue growing at least through to the end of the decade. Now, even though that is the case, like I said, that is still a low-margin business, and the growth is still not going to be like over 30%. Yes, the certificate of entitlement, it is over $100,000. It is ridiculous because my car is like, how many years? I'm scraping it. Okay, I'm supposed to change my car sometime next year in 2027 September. So it's around 8-9 years. When I bought my car, way back when, I believe the COE plus the car, it was only just over 100,000, perhaps $102,000, $103,000. So right now, just getting the certification itself, it's already $105,000. So it's more expensive than my cert plus my car. So it's quite ridiculous. But again, if you're looking at it from an investor's perspective, then yes, that side of Grab's business will continue to grow. Whether or not it can grow as fast as Shopee, I really doubt it. Honestly, if you want me to be brutally honest, I think Singaporeans at home sometimes we just have a lot of free time, and coming back from work, a lot of people, because Singapore, I would say, is a higher SES kind of economy in general. I know that there are still people who are underprivileged in Singapore, but just in general, compared to the region around us, we are in a more comfortable place, and sometimes people just don't mind paying for comfort. Okay, so so to me, I see the lowering of net income as a reinvestment back into the business, but um, Grab does give a okay. You know what? Since you asked me, Grab does give a breakdown in terms of revenue. Singapore, I believe, makes up I think it's third in terms of their contributor to their revenue. They don't show it in the presentation. They show it in the annual report or the quarterly report. In their SEC filings. Let me see. I'm pretty sure I can find it somewhere. Oh, I think, is it here? All right. So you can see their total revenue in this is Grab. So, oh, sorry, I just realized I need to zoom. I really need to get better at zooming in. Total revenue. Okay, Malaysia still comes in top at around $1 billion. Okay, so Singapore has actually overtaken Indonesia. Indonesia was number 2 for quite a while. In 2025, Singapore's the revenue that Singapore generated for Grab is around $727 million compared to Indonesia's $715 million. So they do give a split based on their geographical locations. Um, yeah, I'm not too sure how much more this can increase for Singapore. Yes, you can see in 2024 Indonesia was significantly more. However, in 2025, like I said, perhaps we are really seeing some people start to get priced out of certain areas of the market when it comes to cars. That's why you can see this bump over here. But I think, yeah, and we are such a small country. Just for those of you who are not familiar with the size, Indonesia's population, let me go and see. I think it's 100 over million or nearly 100 million. Is it? 287 million people in Indonesia. 287 million people in Indonesia compared to Singapore. Singapore is around 6.1, later numbers, 6.1 million people. So 6.1 million people in Singapore spend as much of it more than the 287 million people in Indonesia. And I think a lot of that has to do with some of the regulations around ride hailing and things like that. Yeah. So for me, I think I think Singapore will continue to grow their revenue per person on Grab. But if you're asking me which countries are going to be the ones that drive revenue growth for Grab, to me, it's likely going to be countries like Thailand and Vietnam. I think they're getting more and more popular as well in the region as holiday destinations and things like that. And the middle class is slowly and slowly increasing as well. So I think that is where we are going to see some of the growth for Grab. I appreciate you, and please spend more. I mean, yeah, I think uh okay, let put it this way. I have subscribed to the Grab Unlimited subscriptions. Yeah. So because of that, that has made me more conscious in using Grab. Sometimes, like I said, I just walk. Because I used to live in Australia, I can understand why people in America and all that misunderstand Grab. If okay, I'm not too sure. Like when I don't know, is it because of the places that I traveled to? When I was in Vancouver, food is generally pretty expensive. It's like $10 to $20 a meal in Vancouver. I think it's likely going to be the same in the States. It was the same in Australia as well. That's the first thing. Then on top of that, if I want to get a meal, I will have to get into my car, drive all the way out. And so because of that, DoorDash and things like that actually works. But for Singapore, I literally take the lift down, walk less than 5 minutes, and spend less than $5 to get lunch. And that is why for the longest time, I did not use Grab until I moved to my new place. Okay, it's a bit more inconvenient, and perhaps the amenities here are not as well built up as my previous place. So that's why I can walk down 5 minutes to get food. That's why I started to use Grab Unlimited a little bit more, just a little bit more. But yes, I can get a meal that costs $5 or less in less than 5 minutes walk away from me, which is why I haven't always used Grab previously. Yeah, but I think but sometimes I think when you are craving for something nice on the weekends and things like that, that's when Singaporeans start to use Grab more often. Or like when people come back from work. I mean, I have the privilege of, yeah, I think for quite a number of years I haven't really. Okay, I used to be a teacher all the way until 2020. Got the kids settled back into school after the pandemic, and since 2020, I've never been into any kind of like office and things like that. So I cannot complain that I have been tired at night after dinner or during dinner time, so that yeah, so and to justify ordering from Grab. So I end up sometimes just buying back and things like that. But yes, I do think Singapore will continue spending more and more. Is it going to be the biggest growth driver? I really don't think so. Although this actually shows around a 50% growth. So you really never know. Every time I walk out into the streets, I am surprised at how many Singaporeans are out in the middle of the day. So you never really know. But I do think for me, if you're talking about long term, 10 years, 15 years down the road, Thailand, Vietnam, I think these will be the biggest growth drivers for Grab as the standard of living in the region is slowly and slowly increasing. Yes, in Indonesia and the Philippines as well. So you imagine this is the revenue generated by Indonesia because they currently have competition with GoTo. If the GoTo acquisition actually takes place and it is approved, yeah, I think that this is going to gain an even bigger boost. They're going to have around over an 85% market share in Southeast Asia. I think right now the sticking point is how much of a share the Indonesian government wants to have in that finalized merged company. So of course they say it's regulation, but I mean from what I've heard from people, it's likely that the Indonesian government wants a slightly bigger share than Grab might be willing to give up, and that's the impasse that they're at right now. No confirmation of that at the moment. Yep. All right, so I'm going to go back to. Okay, sorry, I digressed, but time to go back to talking about the positions. Okay, then from here, I've just heard about this company, Rubrik. I haven't studied them at all. I just know that they're a cybersecurity play because my favorite play in the cybersecurity space was actually CrowdStrike. But I cannot buy CrowdStrike here. It's around $400 per share. If I buy 100 shares, that's over $40,000. I could go with Fortinet, but they're not too exciting to me. Palo Alto, also too expensive on a per share basis. I think Sentinel One is still a little bit unproven, in my opinion. Of course, if anybody is in the cybersecurity space, you can let me know, and then I'll be happy to change my opinion. I think one of the which is why I ended up with Rubrik. And I didn't just end up with Rubrik randomly, like in the process of elimination. I used Finviz and I actually filtered them out according to their revenue growth and things like that. And I think they actually put up over 58% revenue growth. right? I even wanted to I was even considering Zscaler. Zscaler perhaps still possible because it's only around $150. So Zscaler is one possibility as well instead of Rubrik. But I thought Rubrik is the more fun pick. It forces me to go and learn a completely new company. Yeah. So I will have to take a deeper look at this company, why it sold off and things like that. But uh, one of the one of the key reasons why I've actually chosen this company is really because of the ability to sell options on this. Because if I go out to 2nd of April, even at $50, I am getting somewhere around $2.65 right now. So if I'm getting $2 on $2.50, let's say, on a $50 strike, that's a 5% return. That's a 5% yield for this month. In fact, more than that because we're already on 11th of March. So I can go slightly further down. There's $2 at a 47, $2 premium at around $47, right? Also decent returns. But basically, I do want a cybersecurity play. For me, this actually complements the AI thesis because as the AI build up continues, there's going to be a greater and greater need for cybersecurity. And my personal choice would be CrowdStrike. So it is likely that in the main portfolio, I will be adding CrowdStrike and Nebius. Um, yeah, and for this portfolio, in order to replicate that, I'm likely going to do Iran and Rubrik. I'm still on the fence. I really need to take a look. It's just fundamentally, the company seems pretty strong. All right. So from there, Zeta and Reddit both are advertising plays, which are going to be cyclical if you are worried about a recession. I think personally, for me, push came to, for everyone that has been MeTech. What's MeTech? I don't think I've heard of MeTech before. M MeTech. Okay, I'll take a look at it. What's the ticker symbol? Yeah, so Zeta is likely going to be in this portfolio. Only problem is right now option chain not really juicy in terms of premiums. Reddit is nice, both on the options chains as well as the fundamentals are doing quite okay. Um, MITK. Okay, I'll look into that. I've never heard of that company before, but basically, I'm just wondering whether or not it makes sense to go both Reddit and Zeta. If you ask me, I might just go Zeta. Yeah, I was listening to an interview by the CEO. I might just go Zeta if I had to choose one. If I really, want to, I think at the end of the day, for me, okay, let's say I think the choice really right now is between, if let's say I only have 9 positions, it's either going to be between C Limited and Reddit. And I would say Rubrik as well. I think these three that I'm not going to highlight, I'm going to leave it in white. These three companies are the ones where I'm on the fence about. C Limited, because I'm not too sure whether it will overexpose me to emerging markets. Uh, I would have over 10%, if I'm not wrong, around 15% allocated to emerging markets, a bit higher than what I would want. If I buy less C Limited, then it would just be, sitting there doing nothing because I want to aggressively run the wheel strategy on this portfolio. So that's one. Uh, for me, the reason why C Limited is on the fence, it's nothing fundamental. It's more of a option strategy for me. It doesn't make sense because it's just going. If I position size it at 10% where I wanted it to be, then I can't sell options on the C Limited portion of the strategy. But if I don't, I just leave it there. Then it's just going to be around five. Is it $5,000? No, 50 times 50. Yeah, around $5,000 sitting there doing nothing. Right, $5,000 may not seem like much, right? But on a $1,000 portfolio, it does. It is. I wouldn't say significant, but it is still relatively important for the overall wheel strategy. With Reddit, same thing. If I buy 100 shares, that's immediately putting Reddit at around 13% of the portfolio. Again, not too sure whether I do want to have 13% allocated to just Reddit right now. I do need to understand the business a little bit more. I understand the narrative that some of you were explaining to me, that how, for Reddit, the America side of the business is doing extremely well. From what I have seen so far, it does seem like it is doing extremely well. But I think I want to continue looking into it a little bit more. So for Rubric, yeah, I like the growth. I can just tell you that I like the growth. I need to look into it a bit more. It's one of those things where I'm a little bit tempted to invest then investigate, right? Because I've done something like that similar when I was buying Intel. Uh, yeah, I think I bought Intel at 29 and then sold cover calls on that position as it fell all the way down to 19. Wealth, wealth, I didn't. Sam, if you're talking about the Sam that is always on with Chris and Amit, then yes, I did hear that was the CEO interview I heard. Yeah. So that interview was helped me understand the business a little bit more and understand what they can do and their value proposition. I think the way that he was talking about Athena being able to you can just talk to it like you would a normal LLM, and basically tell Athena that these are certain strategies I would like to test, run the test for me, send me a report every hour so that I can keep up to speed. I think if they are able to do that, uh, then it really does set them apart from some of the competitors. Because initially, the two reasons that put me off Zeta was really because I thought it was a kind of like a meme stock in the X space, so I ignored it. And secondly, the trade desk, yeah, the trade desk, basically you can see their business actually fall off over the last couple of quarters, even going into 2026. I believe they just lowered their guidance, or their guidance missed expectations. So I thought, you know what, at the end of the day, if you want advertising, just go and buy Meta and Google. But when you look at how Zeta does their data collection, I think there is something there that shows that, because I think it's a little bit of the Palantir model, or at least I'm familiar with the Palantir model. So this makes sense to me, right? So for those of you who do not know, for Zeta, what they do is that they go in, and some of these companies, they have a lot of different marketing channels. So they will take one of these marketing channels, and then they will run their marketing software or their AI software on that marketing channel. And what happens is that during this initial testing phase, the companies that engage Zeta tends to see a 6-to-1 return on their marketing spend, which means that for every dollar you spend on marketing, you make $6. And so because of that kind of results that they are able to deliver during the initial phase of setup with Zeta, companies tend to spend even more, deepen their relationship, allows Zeta to control multiple marketing channels. And then this becomes a moat in and of itself. The same way as how Palantir, when they go into a certain segment of the industry, they're able to take the data from there, use that same data, train their AI models, and to be able to apply it into other companies within the sector. Um, Zeta can actually do the same, right? Because they get the data from you on what actually works, what doesn't work, and then it actually improves their model. And then as they basically deploy that model later on, the model is already trained with that new knowledge. So the data that they collect is actually the moat that they have against some of the bigger companies. Okay, so I will watch. I will watch uh the one with wealth as well. Oh yes, and not forgetting 18 straight beat and raise quarters. So that is definitely true as well. So I'm a little bit more compelled with Zeta, because Zeta is a name that I completely wrote off, and then as I studied the numbers, I got convinced. Right. So that's why I am pretty high conviction on Zeta being in this portfolio. Um, I'm really a little bit uncertain about Iran, because I do think Nebius is the safer play. So I would say anything from six. Yeah, Reddit, Rubric, and C Limited, really different reasons. They are on the fence. Iran, I think I would just want to add it in because of the wheel strategy. I don't I understand the risk. So like I said, I am in no way saying Iran is better than Nebius. I think Nebius, if you want exposure to this sector, Nebius is the safer play. For me, in this portfolio, Iran makes sense because I run the wheel strategy quite aggressively. And I do not want this to be too big a position, because if I just go with Nebius, you could say that, yeah, and plus Nebius today is already up by so much. If Nebius was in the $70 range, perhaps then we would have a conversation. So I could just leave this cash unallocated and wait for Nebius. That's one option. Otherwise, I might just buy Iran at around $40. Right. So what I will be doing over the next couple of live streams is that I will try and build out some of the spreadsheet models that I do. I've tried to build some of the valuation spreadsheets on Google Sheets, but it's just not doing it for me. I think I work better with Excel. I think the BMNR one, I will share it eventually. Um, Once I clear out the worksheet a little bit. But I feel like I'm just more comfortable. I'm just more comfortable with Excel. Plus, I think one of the things that really helps is that, you know what? Sometimes if you type a formula into Excel, for example, here, it gives you all the data that you actually need to key in. Oh, you can't. Is it you guys can't see? Yeah, I think you guys can't see. But on my screen, I can see. Oh, the next thing I need to key in after trying to find a future value is the rate, then the number of periods, then the payment, and then the present value in negative form and things like that. So I don't have to remember every single formula. But for Google Sheets, that's not the case. So unfortunately, I think when it comes to some of these companies over here, as I build out the spreadsheet, I will have to do it on Excel file, and then I'll just have to share my screen with you. Um, yeah. Unless you guys really, really want me to do it on Google Sheets, I can. It might just take a little bit longer. Do you want me? Okay, maybe what I will do is that for some of the favorite companies or the bigger companies, I would uh do it on Google Sheets, so I can eventually share it, make it a bit public, at least view only, so that you guys can take a look at how I put the spreadsheet together. Maybe so for maybe three of the names, we will put it on Google Sheets, and then you can share. But for the rest, just so that I am faster at this, I will actually be using Excel and then just sharing my screen with you. So for the not so exciting names, we will keep them on Excel. So like Amazon, Nvidia, and things like that, we'll just keep them on Excel. Perhaps for the more exciting names, like Robinhood, maybe, right? Zeta, we might put them on Google Sheets. Then you guys can actually take a look at it if you want. But we'll see how. Just let me know down in the comments below. Oh, and also one last thing before I call it a day today. Um, the reason why I wasn't around yesterday was because of this. I'm not too sure if you guys can see. It's the 2023 World Championship Pikachu. Oh, it's not. How do people get? I have no idea how they do it. No, the influencers, they always put their hands behind. I think you need a particular kind of camera. I'm not really good at these kind of things. But basically, okay, if you can see, you know what? I think my light is like reflecting on it. Yeah. So this is why I wasn't around yesterday. Came back late and then couldn't get to stream. But for some reason I thought that CPI was yesterday. But when I came back, I realized it's actually today. So I didn't really miss anything. So that's fine. Yeah, they put the hand behind it, but somehow or other it's not. Maybe it's just the reflection. But it's a 2023 Pikachu. Give me a second. It is actually much easier. Yeah. Does anybody here actually collect Pokemon cards as well? Yeah. So this was the card I went to collect yesterday, along with another one, slightly cheaper, like Raichu, the one that's sleeping. But yes, That's what I was doing yesterday. Wasn't back in time. Then when I came back, I realized, you know what, CPI wasn't yesterday, it was today. So I didn't really miss anything. So I had the time to look into some of these companies and yeah, put all that together. So tomorrow, what will be happening is that I will be releasing a BMNR video. It's not going to be a completely new video, because this is actually for those of you who wants to get an update on BMNR over the last couple of days. Because I've spoken about BMNR at various times during different streams, I'm going to put all that together to become a little bit more coherent, cover things like the short report as well as cover the valuations of BMNR. No, we are adults. Okay, go and tell Steve that he collects it as well. Learning from the best. I'm just learning from the best. You're right. So yeah. So tomorrow will be a BMNR video. And then on Friday we will be back. And like I said, I think I am more or less getting to grips with using the streaming software, trying to understand things that I want to cover every single day. I want to get a little bit more prepared in covering uh, live market news as well, because right now I'm always busy preparing the portfolio. But I think it's because I'm preparing the portfolio that I don't really have a lot of time to cover macro news. But hopefully, as we turn this to a daily thing, once I'm back in, I think, 3rd or 4th of April, as we start to turn this into a daily thing, then we will have more time to cover macro news as well. Yes, Steve the milkman. He collects milk, collects Pokemon and everything. Yeah. And I believe like Amit and some of them are coming to Singapore in June, July. Hopefully I can grab coffee with them. Yeah. I followed Amit since his 2000 follower days when he was in his room interviewing Tom Nash and things like that. Yeah, if it's in July, I should be free. I really should be. I'm not entirely sure right now. But yes, I am looking to say hi, because yeah, because for me, during COVID or during the pandemic, when I first started seeing Amit, it was a good change for me, because during that time there were a lot of creators out there that started to get a little bit stale. And I think the community he created over time, Tavis, Chris, and everybody else, really delivered a lot of value. And I think for me, personally, as someone living in Singapore, it helped me understand a lot of the US companies a lot better. Right. So yeah, so I've been following him since I remember the first video I've ever watched of him was I put $25,000 into Palantir. And it was funny because I just put $10,000 into Palantir during that same time. Uh, so I was like, oh, okay, I'm not the only crazy person. And then I just clicked in. Yeah, so I followed the whole him and Tom Nash, and then Justin was on board for a while. They did this morning show and things like that. Yes, yes, the Meet Kevins and Graham Stephan. I mean, they had this. I can't remember what is it called. They had some show, him, the two of them, as well as Jeremy and Andre Jake. And yeah, I think at the end of it, I think they were the four of them were was good at the start, because I think during the pandemic this idea was pretty fresh. But after a while, I think in terms of like doing actual stock pickings and talking about the macro, um, yeah, I think this current group with Amit and all that does it a little bit better. Yeah, I mean, unfortunately, I think for a lot of us, it's not. At least I wouldn't say that they're bad. I think there is an audience for them, which is why they're still so big, right? But for people who are like stock pickers, the last thing you want to hear is that basically the main takeaway from most of the videos is to dollar cost average and save, and save more than you spend. And perfectly fine advice. If you listen to them, uh, you're going to do extremely well. But I think for me, I know that, I'm someone that likes to pick stocks. I want to gain a little bit more deeper insight rather than just revenue is growing, net income is growing, and things like that. Which is why I started clicking around on other channels, and that's how I ended up finding Amit. Yeah, so I remember telling Amit back in 2023 that uh, he inspired me to get something going on YouTube as well. But yeah, really life got in the way. I was running a tuition business for that period of time, and it was a bit hard to do everything. So I mean, one of the reasons why I decided to like put my foot down and start doing it properly in 2025 was because I ended the tuition thing, and then yeah, I was quite encouraged by what Amit can build over the last couple of years. Oh, this, you know what? I don't think someone told me. I wasn't aware that Amit did it. Yeah, one somebody told me, and also because I got a lot of notifications about people following me and stuff like that. So that was weird. Usually I get like the follower spikes on days that I post, but it was like on the day that I wasn't posting. So I think someone told me, "Hey, your video was recommended," and stuff like that. So yeah, I'm glad, he actually found value in it as well. And yes, Amit is a funny dude. Can I share my thesis on Zeta? Okay, like I said, we'll build the spreadsheet eventually and get it all out. But basically, uh, basically to me, I think right now in the advertising space, I think it's quite hard to compete against the big companies, Google, Meta, even Amazon, unless you have your own proprietary data. And one of the things that Zeta is doing is that they're developing this very close relationships with a lot of their clients, and they're having really, you know, first-hand industry data. So they are running their business in, at least the way I understand it right now, is very similar to what Palantir does, where they actually go into the business and they run their AI software, or they allow the company to use their AI software in one marketing channel. So when they do that, on average, the company that uses the AI software see a 6x return on their marketing spend. And once that happens, that actually gives the company the confidence to actually engage them and give them the access to other marketing channels. So you can see the conversion rate is actually pretty strong. Their super skilled customers is actually growing faster than their overall skilled customers. So super skilled customers are customers with over $1 million annual spend. Though that portion or that segment of the business is actually growing at around 24.5% year over year, whereas the total skilled customer is only growing at 15%. So you can see they're actually putting a lot more focus on that higher end customer as well. My X link. Okay, wait, sorry. I think it's because my X link is over here. It's Elijah Cheng. Yeah. So basically, to me, they're going in, they're letting their clients run their software in one marketing channel. On average, the customers see a 6 return on their marketing spend. Because of that, they choose to let Zeta continue to run the other marketing channels that they have. And when Zeta does that, they collect the data that refines their AI, which helps them to get even better for the next customer that they continue to serve, as well as the current customer. Right. So because all of these companies might be operating in the same industry, Zeta got the biggest amount of first-hand data on what works, what doesn't work, and that is why they can generate a superior return on ad spend. I have to dig a little bit more into the technical details on why if I'm not wrong, the trade desk relied a lot on cookies, and now there's this whole death to cookies things, and it's making it harder for them. But because Zeta have their own proprietary data, they're able to do things a little bit differently. Is there still risk of regulations and things like that getting in the way of Zeta, perhaps facing a similar downfall? Maybe, but again, that could happen in any other industry, right? So I think one of the things for me, like I said, that made me think that, oh, this is really sustainable is that they are actively growing their high-end customers. Right. When I do the breakdown, you're going to see they have, I think, skilled customers and super skilled customers. In total, skilled plus super skilled together as on aggregate, the total customer count is growing at 15% year over year. And it has been around 14 to 15% for like the past, I don't know how many quarters, like long. Right. But when you dig into the numbers, the super scale, the 1 million plus spend customers, it's actually growing at 25%, which shows me that they're focusing on that particular group of customers right now, which is going to be the most profitable group of customers for them. High level, that is the thesis. I will be building it out. I might do a video on it eventually. Sure whether I can get that done before I am flying off to Vietnam, but I'm only in Vietnam for just 4 days. It's going to be a very short trip. But my focus right now, like I said, build out this portfolio, live stream every other day, and then yeah, and then we will go from there. April, I promise every day I will be on here. And with my job as well, hopefully maybe sometimes twice a day. So we will see. Okay. You know what? I realized I can really talk. When I said bye, it was like 1:05. I ended up answering one question and it's 1 hour and 21 minutes. Okay, I just saw the notification. Thanks. 50% of Fortune 500. I'm not too sure whether or not it's 50% of Fortune 500, but yes, I will go and take a look at some of those numbers because for a lot of these companies, I in this particular public portfolio, I have structured it such that the companies I'm adding in, other than SoFi, are not companies that I am holding in my main portfolio or I will consider holding in my main portfolio. So basically, I'm hoping to still stay within the fintech kind of sector, but broaden my research a little bit. Because sometimes I get so focused on one or two, that handful of companies. Sometimes I tend to hold anywhere between 5 to 7 companies max. Oh, these 5 to 7, usually I don't need to study all the companies very closely. So like last year when I was holding Google, I didn't have to study Google that closely and things like that. Which is why you can see a lot of my videos end up to be around HIMS, around Grab, BMNR, and SoFi. So similarly, not similarly. I think similarly, if I wanted to hold that number of positions over here, it doesn't make sense to replicate, but I want to go deeper into some of the industries, and to understand, the different aspects of the industries. I just Googled, somebody was asking me about MeTech earlier on, right? So MeTech is actually some sort of cybersecurity play as well. If I don't remember, who was it that asked me about MeTech? Because I just Googled it and I realized, oh, it's like those identity verification and stuff like that. Okay. So it's also in the cybersecurity space as well, right? So it's things like this that, oh, it's different aspects of that same sector of the industry. Like I think CrowdStrike just does the endpoint security, but MeTech perhaps is another option that they do identity verification and fraud prevention. Never heard of them at all, zero. But something I'll look into as well. Okay. Yeah. Okay. And so with that, I will bring this to a close. Thank you all for being here today, and I will see you on Friday. Yes, Rise of the Moon. Yes, I was just saying MeTech. I just Googled, realized they're also cybersecurity doing identity verification and fraud prevention. So I was saying I like to look at the same industries, but look deeper into the supply chain or value chain. Right. So this is one of those companies. And with that, I will see you guys on Friday.